barking dogs, screaming children, lots of different kinds of music, and sirens as I try and do these webinars. So let me just start off. Let me get my slideshow up here. So I want to talk about financial modeling, something that is going to be incredibly important. So some free information. We are continuing to update GCN, our website. We have the latest information on the virus, the latest information on all kinds of resources, tools, tips, templates. We're adding to it several times a day. There is a guide, but if you click on the resource link, we set up by tabs all kinds of different templates. And some of the templates I use today will be posted there, plus I'll be emailing them out. And new classes. We are continuing to teach. We have fabulous faculty that have gone to Zoom. We have a lot of classes coming up in April. In May, we have 7 new classes, so we're going to teach stuff like social media fundraising. We're going to do some things on change management. We're going to teach a class on program management and retooling programs, given what it looks like we're dealing with. So consulting, we're offering rapid response free 1 hour of consulting. And both Elizabeth and I are really good at the financial modeling, so please schedule an hour with us. It's a calendar invite, so you pick your time. I'm happy to walk through spreadsheets, how to look at your assumptions, whatever I can do to help in your financial modeling. SBA loan funds. So one fund is out. It's the disaster fund. It was part of the Family First Act. It was passed, time flies, 2 weeks ago. We're going to teach 2 webinars next week on how to apply for these loans. They say small business and nonprofit. Read the small print, nonprofit. So we are going to talk about how to apply, the different criteria, eligibility. We are eligible for disaster loans. So if you're thinking about layoffs, they're going back to March 1st, looking at your payroll. You're eligible to turn these into grants if you keep staff on payroll. So some advanced planting between March 1st and the 31st is going to help. The loans are at this, and you can start them now. It's all online. And don't get dissuaded. It's going to ask you for personal information. Read the small print. It says nonprofits don't have to do that. We've started 3 discussion groups, listservs. You can email admin@gcn.org. We have one for programs, one for development, and a general one for GCN. I thought about starting a finance one, but I wasn't sure what I'd have, so you can let me know if you want another one just for financial people. We will start talking about the CARES Act next week. We've started already diving into it and what's available for nonprofits, so stay tuned. We also have a whole new group of free webinars coming out that we'll publish probably on Monday. So financial modeling, this is my image. We are the knight, but more importantly, if you're going to do this, you're going to need some armor. We all know as finance people, sometimes we have to deliver bad news. Some of this is going to be about bad news. So my suggestion, really be prepared. Know your numbers. Save your assumptions. I've done this myself. I've created so many different financial models and scenarios, and I get lost in the 10th, 15th version. And what did I assume here versus I assumed here? So make sure you use the side of the sheet to save your notes, your assumptions that you're making. Check your formulas, make sure things balance out. Excel is wonderful until it's not. And then stay strong, stay healthy. I think we're going to have a fair amount of bad news just from the surveys. We've had 9 people respond to our surveys, or 900 organizations, and at least 50% of us already have taken a financial hit. And clearly, if this is going to continue and it's going to be a recession, financial projections are going to be hugely important. So with that, I want to just remind you what scenario planning is. And for financial modeling, we do a piece of this, but reminder, we always start with scanning, environmental scan, warning signs. What are the things that are triggers out there that tip the scales? Indicators, the what ifs, and you'll see I have some what ifs, the critical scenarios. If we're lucky, we brainstorm all the options. I'm not sure we have a lot in this situation, but we brainstorm options. We then write our action plan, and the action plan is what we're going to do, as well as the budget projections, and then we set up a process for monitoring, and then lastly, we go into action. I became a huge fan, and some of you have heard this before, but I worked in South America for Caterpillar Foundation. I helped set up mentoring apprenticeship programs, and I watched $250 million companies change in 2 weeks in response to a change of hyperinflation, dictators elected, economy crashes. And they had in the drawer a plan, a scenario for every situation they might face. They got it out of the drawer and they implemented in 2 weeks rather than 3 months of meetings. What do we do? What do we do? What do we do? They had it all planned out and they could turn on a dime, and their companies were 250 years old, 125 years old. They've been around for a long time. So I really learned about it and watching them do it, and have been a fan ever since. Now is the time to do scenario planning. I really think I've been saying next week, but it's Friday, so now is the time where we start really crunching numbers. Okay, so 4 major pieces. 1, what are the unknowns? What are the options? And in the financial world, we always look at best, middle, and worst case scenarios. Where we come in is we start running the numbers. You've got to crunch some numbers to see what your revenue and what your expenses, what your bottom line looks like, and then how you're going to adapt. You need an action plan for at least 2 scenarios in this process, and we'll talk about that in a minute. So my overview on scenario planning. Defining this scenario. So there's sort of 2 parts of us in the finance world. One is revenue and one is expenses. Revenue usually is divided into 2 pieces. Contributed, that's our grants, foundations, individual, annual appeals, festivals. The second is earned income, the fees, workbooks, government contracts, reimbursement, per diems, things that we charge for. Second, expenses, so that's our programs. So we have program expenses. So a lot of folks in the emergency world are incurring expenses. They're ramping up because of they're getting food and helping people. Staffing, for most nonprofits, is 80% of our budget. And then operating expenses, the printers, the occupancy, all that overhead stuff that we have. So our scenarios, we really need to look at both, almost at the same time, but also differently. What we do about revenue dictates what's going to happen in expenses. How we change expenses then flows back into what we do with revenue. Oh, sorry. So key questions, some of the things you're going to think about. How long is your cash going to last? Do you have reserves? Can you do endowment withdrawals? Some of you have endowments. Some of you have reserves. Most of you probably have neither. You've got to really look at how long cash, whatever that is to you, will last, days, weeks, months. Some of you I know have already laid people off. You were in the after-school programs. The day the kids went home, you stopped getting paid. What's the timing of payments if you're on a cost reimbursement? The state, county, city, schools, whatever, how do you get paid, and what's your timing? Because if you go out 45 and 90 days for payments, that's going to affect your cash flow. If your programming slows, so you promised to do X, Y, Z, you've stopped. You either have no reimbursement coming in or services are delayed. It's pretty clear from our conversations with foundations, they're going to get a hold of their grantees probably starting next week or the after and say, okay, we gave you this grant. You were supposed to do X, Y, Z, but we're going to let you turn it to operating. There's a lot of work going on right now in the foundation community about how to get out and how to look at the grants they've recently made. 2, timing of grant payments. What if you have to delay programs? What if you have to postpone? I did a development webinar yesterday, and I suggested everybody get a hold of your funders. If you're delaying, postponing, not able to deliver, then you need to be telling funders that and start negotiations with them sooner than later. What if your biggest fundraiser was canceled? You have that. We have a lot of spring fundraisers in the nonprofit world. You've canceled it, so what's that done? And I've heard from several that this happened so fast, you bought all the supplies, you had the food, and then it got canceled suddenly. So again, looking at the cash perspective, expenses, and how money comes in from the revenue side. First step in financial modeling, you got to have a basic worksheet in Excel. You really have to have a budget with the actual expenses, I hope, for January and February. Get your financial statements, plug in the real numbers, and then you're projecting out the remaining months of your fiscal year. If you're on a July 1, then you've got 6, 7, 8 months of actuals you could plug in, and you're projecting out from there. Understand your rows are revenues, your expenses are rows, your columns are the programs, total programs, then fundraising, admin, and then total organization. In order to really do the modeling, you've got to break your programs into some columns. If you're trying to do it on an entire organization basis, unless you're under 250,000, I think you're headed for a headache. So we have templates. No fear, we will be passing out templates to you. Cash flow is a second worksheet that you're going to need to create because timing is going to be everything. Cash flow is not a budget. So cash flow is when you actually get money in the bank, in your checking account, and when you actually use bill pay or write a check and the money goes out. Again, you can plug in actuals for wherever you are in your fiscal year, and then the rest is projections for both revenue and expenses. Please, I beg you, do not divide by 12. You can do that for rent. You can do that for some leases like the printer or whatever, but other things, insurance is seasonal. Most of us pay insurance in a lump sum. Directors and officers liability, whatever. Please look at cash flow very realistic. Otherwise, you're not helping yourself and you're just redoing the budget. So step one, revenue. So what are some of the unknowns? We talked about scenario planning. We have no idea the short or long-term impact on fundraising and giving. We don't know how long this virus is going to last. We started all thinking, oh, this is easy, 2 weeks. Then we went to 4 weeks. Now we're talking 8 weeks. Now they're talking maybe it'll be back in the fall. Who knows? But we're going to have to make some assumptions. Who's going to be impacted and how? So funders are going to emergency things. What's that going to mean for your funding if you do after school? What it's going to mean for your funding if you deliver leadership programs? So I think you have to figure out what are the things you do not know in terms of funding, and then go to what we do know. The money's going to emergency crisis. The Community Foundation with their big one is going to go to vulnerable populations. The response funds are getting created, and we just posted a list of all of the United Way Community Foundation response funds all over the state. They're working on eligibility. Most of them are going to have things out this week or next week. Arts are going to have their own fund. Blank and the Community Foundation are about to make an announcement. They have an advisory group, and they're working hard on what that fund will look like for the arts community. The Governor's Council on the Arts does have a resource page up. And be sure and remember, and we'll do more next week on this when we talk unemployment, independent contractors under the CARES Act, once it passes today, will be eligible for unemployment. So think about all the independent contractors that you hire. They're now going to be eligible. And in the arts community, that's a large number. So just mention that. Here where we're at, we do know the foundations are saying the same thing they said in 2008. They cannot cover all our needs. They can't cover the cuts from government. They can't handle every need that's out there. So expectations are getting realistic. We also know from 2008 that they stepped up. They're on a 3-year rolling average. They're at the high end of it, and that they did make lots of contributions and donations, so they're not out. The corporate world has been donating to the community funds, the response funds. They've been doing large donations, and what they've been talking about with us is organizing volunteers. They know lots of us are short volunteers, and they're trying to think if they can help some way doing that for us. So some knowns. You probably know different things about your own revenue streams. Make a list as part of the scenario planning. So there are kind of two levels of this scenario when I think about it as a financial person. The first is I think scenario one has you that we're going out with this recession with very limited remote challenge programming until May 15th. Cut your revenue 20%, cut your revenue 50%, cut your revenue 80%. It really depends on your funding sources. I can't, it's hard for me to do a blanket, but I've been doing scenarios at 20 and 40, as you can see. My second scenario, and some of you are going to be much deeper because of the sector you're in. And I want to say, if you're in the health sector, if you're in emergency services, then your challenge is ramp up. So rather than cut, you're going to show a spike. And now we're learning about spikes with the disease, but you're going to show a spike of revenue that's probably very temporary. You have to plan differently for temporary revenue. It will not last, and the funders have been very clear about that they're making spikes right now of investments, but it's for temporary services. We've had several discussions with the city of Atlanta, and again, they're redeploying money to feed seniors, feed kids, get the food pantry up and going, or the food bank, but they're saying it's a spike that's short term. It will not be long term. So if you're in the spike, your two scenarios, I should have done a chart. Sorry, you're on a different. If you're in the arts, your revenue's probably caught 50, 80, 90%. So different scenarios, different depending on the sector. I think the second scenario round has to do with recession. From a financial planning standpoint, I hate to be a downer, but everything I see from the economists except one says we're in a recession, says it's going to last the rest of the year. This has been so quick, so deep that it's going to take a while to dig out. You've got to look at reduced, not remote programming. You've got to cut your revenues, even if you're super duper fundraisers, even if you get your government contracts going, even if you get back to business, it's not going to be the same. So that's an example of two different scenarios. Okay, timeline, and I'll do this and then I'll take a break for some questions. So I have been all over the map, but I still suggest from a financial modeling standpoint and scenario planning, there's the 4 weeks, there's the 8 weeks, there's the end of your fiscal year, and then 18 months out, which is my recession one. I think you've got to set some time horizons for your scenarios, and I think they have to be pretty realistic. I think this remote thing 4 and 8 weeks, but then end of fiscal year at 18 months is where I'd say reduced, altered, changed programming to respond to a fiscal environment. All right, so let me stop there or back here. Questions. I see that there are some questions. You have choices. You can put in the chat room a question, or you can unmute yourself and ask me a question. We will share the slide deck. It'll probably take us to Monday morning. And when I share the deck, I'm also going to share my templates. I have 3 of them, maybe 4 that we can share. So ask about scenarios for environmental groups. I would put so environmental scenarios. I think you're looking at immediate reduced funding as it shifts, and then people channeling back in, hopefully in the fall. I know a lot of environmental groups rely on fundraisers, rely on festivals, rely on different kinds of experiences. I was down on the coast just before this hit. They had a big camping, canoe paddling fundraiser. They had another festival plan. I think they got one in and the other got postponed to the fall. So look at what you can postpone. Again, I think environmentally, I probably would do my 20, 40, and even 50% is my second one, just thinking grants are going to be diverted for a minute to the emergency services. I have a question about layoffs. If layoffs occurred since 3/1, would that impact your ability to be considered for a grant? Yes, it will. The SBA disaster money, not the CARES Act. I don't know CARES yet, but the disaster money, which was put out under Families First 2 weeks ago, is very clear. The only way to make it go from a loan to a grant is that your payroll, you have payroll from March 1st forward. You can still apply for the loan, but it will stay a loan. It will not get converted. It is a 30-year loan, so the payments could be small. The other trick with it is the SBA will be deciding how much you get. You're going to fill out a worksheet on your liabilities. They will not touch long-term debt. It is immediate things that have come since March 1st. So stay tuned. We'll do more next week on it. Any other questions I can answer? Scenario planning, timelines. I mean, each of you knows your own organization. And so I think you've got, it's hard for me because we're such a huge sector, and we know from our survey of 900, 50% were impacted instantly, and 80% are being impacted as we go through this financially. Arts and culture, I'm asked a lot about fall fundraisers. I am worried about the fall calendar being so crammed and so full because of everybody postponing. I'm worried about disaster fatigue. So the data from 2018 and 2019, individual contributions were down about 2%. Some of it is tax implicated, but others of it was disaster fatigue. We throw up crowdfunding for all kinds of things. We get to October and we've done gun shootings and tornadoes and hurricanes and floods, and people either don't have a lot of money or they're just tone deaf from the disasters, and fundraising is not what it was. So that's what the research is saying. I have no idea, but I would be thoughtful. I would not try and put my spring fundraiser and my fall fundraiser and do two. I think you're asking for trouble if you try and repeat the spring and jam two together in the fall. Maybe you can try and make a bigger one by putting all your efforts in one. And I know you're going to lose money, and I think we're all learning as we go. Okay, basic worksheets. Let me talk about that. So step one in the worksheet, you always start with revenue, and it's revenue assumptions. You're going to figure out your revenues. You've done that basic worksheet on budget. You've got to make some assumptions. You can use a percentage method. You can go line by line. The template I give you is really a line by line. I usually cut revenue, and then I go down to my bottom line. What's the deficit that I just created? How big is the hole? That's really going to signal, is it a short one? And okay, I got reserves, endowment. I can put together a fundraiser. I can hope and pray for fall. If it's a deep one, then I got to go up and go to keep working. I'm going to go back after I look at the bottom line, and I'm going to go back up to revenue. I'm going to check my assumptions. I'm going to look, did I go deep enough? Did I go too deep? Did I make this assumption on this grant and think, well, I put it at 50%. Now I'm going to raise it to 85% because they love me. It is a back and forth thinking, assumptions, and modeling kind of approach that you use. All right, so step two. Review impacts, which I think I just talked about. Sorry. How large is the deficit? What's the number to get to break even? Both revenue and expense. Do you need bottom line? Cuts too large, too conservative? Pulling from the reserve? We are going to do, and I'm going to talk about this later, we are going to do a special appeal. Giving Tuesday is going to National Giving Tuesday in May. There's an opportunity to raise some money. Can you get your board pledges in early? Can you get them to do some fundraising? Again, adjustments to revenue. What difference did it make? Did you get too conservative? Maybe you need to go deeper. Look at that for step two and really play with your revenue assumptions. Get the revenue impact first. Next, I want to just mention this. one of the things I think you need to think about, this is the nonprofit life cycle. And let me explain it for a minute. There are 4 life cycles for a nonprofit, and it is a bell curve. It looks vaguely familiar, doesn't it, with this disease? All right, so entrepreneurial, that's the first 3 to 5 years. Everybody does everything, all hands on deck. We're fairly small. The crisis becomes everybody does everything. Growth, rapid growth, cash. Our expenses always outstrip cash. It is more expensive, high need, high demand, not enough staffing. We're trying to get some systems in place. The crisis becomes then, we need systems, we need procedures, we need to figure out how we do things, we need departments. Then we're established, and there's a nice little ride to be established for a while. That, we're fat and happy, know what we're doing, but then established comes down to the curve on the right. Now you start dying and terminating. You're so established, you've missed the market. We have a lot of nonprofits in these different life cycles. And the bridge is at terminating, you wake up, have a crisis plan on the right, you get across a bridge, and you go back to growth. And the cycle becomes growth, established, terminating, growth, established, terminating. It is a circle that goes round and round. I think from a revenue perspective, I think you got to think about what life cycle you're in. Because if you're on the terminating one, please be realistic. You're already struggling for revenue. If you're on the growth one, cash is already strapped, and you may have some hyper spikes. So think about this. I have found people, when I show this to a board, they can pick exactly where they're at. We actually have on our website a tool where you can ask some questions, and it'll pop up and tell you where you're at as an organization. So from a revenue perspective, I go here because I've done so many turnarounds and think about where's the organization at, and then how do I put that lens, I call it, into looking at my organization in order to project revenue when I'm in a crisis. So here's the definition for you. I particularly suggest those in the growth, established, terminating, or actually I want to say growth and terminating. Entrepreneurial, established, you're good. But in the other 2, there are impacts on revenue and expenses, and I think you have to take them into account when you're doing financial modeling. So, can I stop there for a moment? Are there any questions? So there's some questions about timing and moving forward. So I think timing is everything. I've talked to a number of people about, I think you really don't want to go out with any crowdfunding unless you're emergency services. So if you're in the food, shelter, homeless, kids, emergency stuff, disability, emergency stuff, yeah, you can go out for funding probably next week. The rest of us, I think, have to wait. And I was saying mid-April, but I'm really now thinking mid-May. It depends on how long this. Somewhere after we spiked, you can do some fundraising and get creative about it. I think you do have to plan for contributions to be down this year by the time we get to fall. And I think you have to think of the foundations as stepping up differently. So if you have reserves, I think, yes, you can live on them. And I'll use GCN as an example. We have some reserves, but I have really tried to go out and make the reserves go 2 months longer by looking at revenue and grants. So extending out the reserves and what you can infill with revenue so that you're not 100% reserves. Again, we have no idea how long this lasts. So that's just an example. Other questions? Anybody else? You can unmute. I get lonely talking to myself. Oops.
Can I ask a question?
Yeah, please.
All right. So that was my question that you were answering in regard to when do we start this emergency campaign? So
yeah.
Right. We're not an organization. We're an infertility organization. We are serving our clients in a different way now that, doctors and fertility clinics are shut. We have expanded our services. We do have revenue, which is the tricky part. We're good for about a year. But I know that the second everything gets lifted, our expenses in giving out grants, which we do, is going to be increased. So if I don't feel the urgency right now to start fundraising, I just
hope you cut out. I taught yesterday. I don't know if you got kicked off. I hope not. I taught a class yesterday for development officers.
So I know.
And
it's planning for the future.
Yeah, I think of this planning for the future. I really think that you've got to look at communicating now to your donors. You have to be in conversation. And I segmented donors into 4 groups yesterday. Major donors need a personal email and a phone call. Your repeat donors was my next category. They need an email update. Your first-time donors you want to convert to repeat donors, they need a special email and almost a soft ask in 2 weeks. And your prospects need an update and an ask in May. So you want me to go through that again? First, your major donors need a phone call or an email, very personalized. Here's what we're doing. Here's how we're responding. Here's the impact on us. Your repeat, the data says 67% of people after a second gift give for 8 years. So treat these guys separately. Your repeat donors need an email update. Here's what we're doing. Here's the gaps in services. Here's how you could help us, a soft ask. Your first-time givers need an update and hold them for an ask till I was saying April, but I'm now thinking May. And your prospects need just an update and hold them to whenever you're going to do a fundraising campaign. But stewardship, you're keeping all 4 groups updated in the communication loop. Some soft ask, some major donors a harder ask, prospects save for later. So segment your portfolio. Think about how to ask and how to update. But communicating is really important right now with your donors. The asking then.
Question about that.
Yeah.
Okay, so we traditionally have an annual fundraiser, and we're a new organization, less than 5 years old. So we anticipate that our October fundraiser in person is likely not going to happen. But a lot of that is our new, we have new prospects that we want to be able to cultivate as a result of that. So do you have advice right now for the 4th category, the prospects, if we're not necessarily able to do face-to-face events this year?
Yeah, so I think you've got to come up with, first of all, your prospects, I would not email them right now. Again, your prospects, probably it's May, given how long after we spike, whenever that is, I would start emailing some updates and communication. I would not ask them for money, how you weathered it, what you're doing, what worked, what gaps are, where you're headed, where you're headed now that the spike is over of the disease. Then I think you got to figure out, I think you need an A and a B. I think you need a virtual kind of event for October and a real event. We don't know yet. So I think right now through maybe August, I would do both kind of planning parallel. And then in August, make your decisions of what you're going to do. And there was a question. I'm going to redo that development seminar because it was so popular. And also we have the slides and we can pass it out. Other questions? All right, financial modeling. So next place you go, step 3, is you've got to go to expenses. Start with your operating expenses. So the idea is preserve cash. So, you're not going to be buying paper because nobody's in the office. Whatever, contractors probably go first. what are the things that you can eliminate from your budget expense-wise and start reducing and see what that does to the bottom line. Now you've fixed revenue. You have a bottom line. Can you get that to break even? I always start with positions and salaries, meaning I start with a $30,000 position, a $50,000. I don't start with the caseworker one who his name is Joan. I start with salary levels, not people. So when I say positions and salaries, what's the average cost of the position? Is it $45,000? Is it $65,000? Is it $25,000? Whatever. And I start eliminating there to see if I can get to that break even. I then go to modeling, and I think in this environment we have 3. In 2008, it was a little bit different. So furlough, no pay for probably a month. Furlough means you're going to call them back. Furloughs can be done, and I've heard people doing furloughs where it's take your vacation time, we'll pay you. Furlough, no pay because we have no money, but you're going to get your job back as soon as this is over. Next week, we're going to do seminars on unemployment and the impact of all of that, and we're going to get some experts. So I'm only doing financial modeling. So what's it like not to pay people for a month, for 2 weeks, for 2 months? Again, assumptions. Layoffs, look at salary before people. So if you do layoffs, do you need to do 100,000 in layoffs? Do you need to do 50,000? Do you need to do 10,000? What's the dollar amount that's going to get you to the right layoff before you start going to positions? A lot of us in the recession really tried to, in the early days of the recession, thought we can wait this out. And we did things like we reduced everybody 5%, we reduced everybody 20%, and we tried to keep all staff getting some money. You're going to have to play with a scenario of a staff reduction. If I reduce people by whatever your percentage is, depending on the hit you're taking, for a month, for 2 weeks, for 3 months, again, scenario, you're trying different things because your whole goal is to get that revenue and that expense to balance to break even at the bottom. Okay, modeling, step 4, now you're ready. You've created worksheets. You've got a revenue scenario and expense. Now you really want to go to best, middle, worst case. Best case, your assumptions, your grants turn, you get your fundraiser happens in the fall, whatever, make your assumptions. I always do best, worst, and then I come back and do middle and between when I figured out the 2 ends. So I always start with best, and then I go to worst because it's depressing, and then I go back and do middle. Having done a lot of these because I've done so many turnarounds, and in the last recession, a foundation actually hired me to keep 34 nonprofits alive. They had been investing in them for more than 10 years, and they wanted to make sure, and I kept 33 going, so I did a lot of financial modeling. And I really learned the hard way, label your worksheets. This is assumption 1 with a 20% cut. This is assumption 2 with a 50% cut. On the right side of all these columns and numbers, keep your notes of the assumptions. Track them right there on the spreadsheet. I sometimes would create 15 spreadsheets trying to figure out to get to that break even. And then, well, is this the 15% one or is that the 50%? Well, I'd get lost in them because I'd be going fast and furious at cutting numbers. Keep notes. The other, I think you have to have some internal goals. And I suggested like criteria, I guess. Preserving cash right now is really, really important. And I'm going to talk about that more in a minute when I get to cash flow. Second, retaining talent. Is it retaining all staff, talent staff? Third, are you trying to go 45 days thinking this is going to get over and your money's going to flow in again? Are you going to go 60, 90? Are you, how do you get to fall when you've got something coming in? You've really got, I think, set some criteria after you see the scenarios and the modeling, what's most important. And I can tell you, too, in my world, preserve cash, retain talent are absolute. And then I go from there to set some other ones in terms of timeline. I'm now thinking 8 weeks. Yesterday I was at 4 weeks, but the more I listen to stuff. So worksheets, let me talk about that for a second. Here's what we got for you. And I'm going to show you slides for a minute. we have a revenue worksheet that allows you to do the revenue analysis. It is from the Wallace Foundation. I love it. All the formulas are built in for you. There's a place to keep notes, you'll see. We have a budget worksheet, so we have two different kinds of budget templates. You have to have a core budget out by program. If you haven't done that before, what a great opportunity to do it now. And I'm saying that somewhat sarcastically if you can't see my face. Cash flow, third worksheet. You have to do cash flow worksheets right now. We have a basic and we have an extensive one. You've got to model out what your cash flow is going to look like on a monthly basis. And I'm talking about real cash flow, not divide by 12. So, and I'll talk about that when I get to the sheet. So here's a budget worksheet. This is one that just starts with your personnel costs, and it has tabs at the bottom. But see, what's percentage full-time, what's the budget, allowing it then by program. You can split it out. What's administration, what's fundraising. The yellow is what you fill in. The gray will all fill in for you when you put the information in. This is the revenue analysis that I love so much. And this is by program again, so no more doing the organization. If you're teeny, you're under, I don't know what it is, under 200, under 150, then yes, you can do an organization. And in program one, you can just say organization. It lists the funding source, the revenues for the current year only, likelihood, percentage, then there are your cases. Best case, moderate case, worst case. Place to keep notes. And this, you can see it goes down and allows you to do up to 10 programs. There is an instruction sheet with it, and there is then a summary of the assumptions and what you created them. You can up here in the yellow, so best case is 100. You could change that to 80. You could change the moderate to 50 and worst case to 20. And you can play with this wherever there's a yellow color. And we will be posting this. The next, so here's an example of somebody that filled one out for an after-school program. So it's a pre-kindergarten program. There's their contracts. There's their grants. Shows you possible likelihood of receipt. Then best case, see what happens, moderate, worst case. And you can see they didn't put any notes in. Shame on them. They should have. Here's an after-school program. So the example is one of the tabs on the template that we'll be posting so that you can see that. This, I suggest you do first to really look at your revenue. Again, I'm assuming you have to present this to an exec. If you aren't the exec, you have to present it to a board, to a development committee. What I worry most about, and I saw this in the early parts of the recession, is that we set plug numbers for fundraising. You cannot do that in this deal. You have to be very realistic about what you can do and what will happen. So this is a cash flow projection. We are posting this also. Beginning cash, that you pick a month. So pick your month. You can write in the month. You could start with, I actually would start with March 1 and go March, April, May. It's not exactly quarterly. Beginning cash, what was in the checking account on the first day of March? Operating cash, what do you have on the first day of the month? And then go through, and it has, you can fill in this, you can extend it out, put in the income, put in the expenses, you're going to get a bottom line by month projected, and then you can go back and put in the actual to see how you did. I've learned a lot in cash flow planning. I almost can do it intuitively after I've run an organization because I put in the actuals and I learn our ebbs and flows. We all have spikes in spending, and we have dips in revenue. You know, July is a dead month. There's almost no revenue. Expenses are lighter. In the fall, we're all ramping up. You've got that fall festival. Your expenses are going to go up. So it's really thinking through from a cash flow perspective. The next one, so we have a budget template. I didn't take a picture of that. We will send it to you. And again, two different templates. So we have a basic cash flow and a more complicated cash flow. We have a budget template by program. We have the revenue analysis. So 4 different templates we'll be sending with email and we'll be posting on our website. So questions before I get in to summarizing? Any questions I can answer? I see there's some in the chat room. So 8 weeks from this week, yep, 8 weeks starting Monday. Let me go back up. Payroll tax credit in the stimulus bill, absolutely. So we'll talk about more, but in this current CARE Act, so I'm going to talk about Families First, which is disaster money, and CARE Act, which is stimulus money. Look at the tax credit. You can take credit. You will have to repay in 21 and 22, but that's another expense thing that you could play with in your financial modeling. And I'm assuming over the weekend we'll be getting more detail. 8 weeks from Monday of next week. With circumstances now, would it be better to do a weekly cash flow? Wow, I've done that. That is, I think from that I would do a weekly cash flow for the next 2 months. I'm not sure I'd take the whole year out, but yes, I would really try and figure out revenue and expense on a weekly basis for April and May. Again, thinking we hit our spike. I don't know if you all saw the thing in the AJC and the Emory, what they released. Our spike is sometime in April. So maybe in June 1st, we're back at it. But yeah, I think a weekly might make sense. I think it depends on the role of your bills, how you pay your employees. You may have employees that are weekly, bi-weekly. You may be on a semi-monthly. A lot of it, we're just so different, and there's so many different kinds of nonprofits. So that, any other questions? Anybody else want to brave asking a question on the internet? All right. I think you should seriously think about the loans. We will have more information next week. We're doing 2 different webinars so we can hit people with different schedules. We will talk about the disaster money. We will talk about the CARES Act and what's available. I suggest, I worked with the SBA a lot and did loan packaging in the 90s. So what I know about the SBA, first, they're going to decide the amount you get in the loan. You're going to fill out your need, but they're going to determine amount. It will be competitive and applying online. Do not mail it in. Apply online, and it will take a while. They're saying 2 weeks. I think that is highly optimistic of them. I know them to take much more time. These loans, if you meet the criteria, can be forgiven and turned into a grant. So really look at the rules and think about it. With your reserves, check out your policies. Make sure you follow whatever policies you have in your finance. Do you need board permission? What kind of permission to use for what circumstances? Do you even need to revise your policy short term? So look at reserves, get your permission set up. We're all going to learn about the importance of reserves. And I have to say, I would be crying too, because, you know, it is so hard to build a reserve. And now we're going to spend it in 8 weeks. And to go about rebuilding it just makes me want to cry some days, because I know they're hard to build and I know they're precious. So with that, let me see. There are a couple more questions. Emily's got my back. So elaborate on the SBA loan. So the SBA in the disaster money has said you can borrow the money. They will give you a 30-year term. But if you keep staff on payroll from March 1st, so far they were saying March 1st to the 31st. I don't know if they'll extend that. But if you show consistent payroll from March 1st, it will be converted to a grant. You do not have to pay it back. If you've already laid people off, it's a loan. If you've already laid people off, they may not fund you for the same amount. Again, it's all going to be about this worksheet that lists your liabilities. They will not fund past liabilities. If you had a line of credit and you're already $100,000 into it before March 1st, they're not touching it. But if you went into it on March 15th for $100,000, they would cover that. It's debt that you incurred in the month of March once the disaster was declared. And Georgia is a disaster state. So that's why these loans are coming out. The second will be in the CARES Act, which I think the House is working on today. Those loans are going to be through our banks. So there are banks, and we will get the list to you, that are SBA certified. You are going to have to work with a bank to get those loans, different set of rules, different application process. So all I know is it will be SBA certified banks. It will not be an online process. Somebody asked about the amount of money. I think up to $100,000 can be turned into it. Depending what you ask for. Again, the SBA is going to turn the amount. So the 100% of what you use, of what you get in this loan, could be turned into the grant. There is one type of disaster that's limited to $25,000. There's another that's $100,000. Again, the devil's in the details. Definition of salaries, no, it's really salaries. It is not independent contractors. So March 1st, you'd have to have salaried employees. Independent contractors, they may help you pay them in March, but you're going to be on the loan side. How do we decide when to liquidate reserves that are currently in investment funds? Well, there's your cash flow coming in. I think you've got to project out. I wouldn't want to take out all my reserves because the values dropped so much. The last 3 days have been good, but I think timing is everything. I think you need some wealth management advice. I think you also need a strong cash flow to see what you need, what kind of liquidity you need in what timeline. That's back to the person that suggested weekly. I would do a cash flow until the end of December, and I would then look at where I had my dips, the red, and I needed cash, and I'd get together my treasurer, I'd have a conversation with the board, a wealth manager, and I would try and figure out a strategy on what you liquidate and what you keep in investments, because it's a tough one. And for the person that talked about a crystal ball, yesterday I put a crystal ball right in my slides, because boy, I wish I had one to help all of us, but I don't. Okay, here's some ideas, managing cash flow. So here's what I've heard people doing. They are calling all of their vendors. They're calling their landlords. They're calling all their leases. And they're basically saying up front, we're going to be 90 days out. We're not going to be able to pay our bills. And they're working out payment. In some cases, landlords have been very understanding. In other cases, they've said, we're going to put it on the tacket on the end of your lease. In other cases, they said, nope, you have to pay us. You don't know until you ask. You can, having done turnarounds, and I'm not advising this, but I have done it, payables, you really don't go to collections until you get 90 days out. At 91 days, bells and whistles go off. So you can manage many payments, preserving cash by extending out and delaying payments. In a turnaround situation, when you've got an organization near bankruptcy, which I've done, you pay people on the 89th day so you can keep the copier going. You're always 60 days behind, and you're trying to stay in that 90-day window because they'll cut off your service at 91 days. You need to call vendors. You need to figure out. Right now, the objective is preserve cash to meet payroll and salaries and keep people employed. Usually in nonprofits, our loyalty is to our clients and to our staff. So my conclusion here, questions. So email us, admin, if you want to join in the development group specifically, complete the budget, add in actuals for wherever you are in your fiscal year and projections for the rest of the year, then start creating your scenarios. Complete the revenue analysis worksheet and create a cash flow analysis. Those are going to be your best financial tools, both so you're on top of it for your board. They're going to start asking tough questions if they haven't already. Be on top of it for CEOs. If you don't have a finance person, you're going to be doing it as the CEO, as maybe get help from your bookkeeper or accounting person. please do not, you can run one in QuickBooks, but you're far better off creating your own Excel. The QuickBooks ones are funky. They'll give you data and information, but I would not bet the farm on them. I wouldn't rely on them from what I've seen. So I always create my own in Excel and get my fingers way into it so I understand what's going on and can really speak with knowledge when I start making cuts. Questions, comments? That's it for me. Anything, anybody? You can use the chat room too. If there are any other kind of seminars we could offer, we're really trying to figure out in 2-week increments. The spreadsheets will be posted on the website, and I also will send them out by email. Everybody wants a spreadsheet soon, so Emily, my sidekick here, you're going to help me get them out this afternoon. We will do the best to get them out as fast as we can.
Absolutely, absolutely. GCN.org.
Okay, thank you. So I think I scared a few of you. I am sorry. Realistic. The great thing about numbers is they're projections. They're not real people. And so you can go in and create the spreadsheets, play with things and scenarios. You want to put them in the drawer. So remember my South American experience. These are to be prepared so you can sleep at night. You've got them in the drawer, and then when things evolve and change, you've already done all the thinking, planning, and you're not doing it under pressure and craziness. So please stay strong. Remember the night at the beginning. I should have put it the night at the beginning. Get your armor, stay healthy, eat well, hydrate, take breaks, go outside, self-care. But scenario planning for many of us is a form of self-care. It gives us something in the drawer when we have to react. Anything else I can answer? I miss seeing all of you in class. This is definitely not my favorite way of teaching. And I look forward to being able to see everybody again. Thank you very much for coming. We will get the information out to you. Bye.